Hi, welcome to the Dow Market View for Monday, the 29th of September 2014. Starting off with the 5-minute chart, we can see immediately that we had two losing trades there. But I want to talk about these two trades and just give you some pointers that could have allowed you to have stayed in the actual trades. The first thing is to look to the left, as I've spoken about on numerous occasions within the market view. Have a look and see where the lows are and what the market's been doing in the pre-market. We can see from early morning Friday that the market moved lower. We see the market testing, we see the buying coming into the market, and this is the low that was made. The market then moving back above the previous day's close, which is Thursday's, with prices then sitting on the close. There's the first clue. And moving higher around to 130 when we had the GDP figures from the US. They came out at 4.6 as forecast. This news was used to mark prices down. Funny enough, taking the market back to the previous low there that we saw to the left where we had the buying, and then the market reversing and moving back to the upside there. So we have a buy signal above the close. And on the left here, just after the news, we see the market finding support. And this area here is obviously crucial to the market, as is the close. What you can do in these situations, when you've got something like a pivot point or support to the left, is see if the market will actually close above or below to confirm the weakness within the 5-minute time frame. So, for example, we have the buy signal here, and then we see the market moving slightly lower. And at this point, I was on Skype talking to Neil when this was actually happening. And I said, this market's going to come back. And he asked why. And I said, because of the buying in the green bar there and the support to the left. There was no more selling after this selling bar, so expect the market to come back. And that's precisely what it did. But it went down first and to hit the stop. Whereas adopting the principle of seeing if the market would actually close below the actual low to the left, and it didn't close below the low to the left. It went through, had a look at it, and then turned around and then came back, and then went on, of course, to make the 20 pips there. Second one, slightly different. Nothing you can do because the market again has come back to these lows over to the left, and you'll see if I just drag this across, you can see there testing at this level as well. And there's no knowing whether the market's going to continue low because it's a funny time of the day, 16:50, 10 to 5. But then the market comes back above the close, and then we see the market moving back to the upside, which is something that I spoke about in Friday's market view as well, that expect prices to move higher and put in this sort of reversal, which is what we see in the daily chart. You see prices there turning around and moving back to the upside because, as I keep saying, this is a Ponzi scheme. It's funded by the government with all of the QE money. That's where it's making its way. It's not going into the economy. It's going into the stock market. And that's why we see this big bull market that we've had for the last, where are we, 5 years, March 2009. Just over 5 years now. So the market moving back to the upside, and then prices stopping. Just draw that in again. Just wanted to heading towards the 76% of the previous day's bar. This is a little technique that you can use by using a fib retracement, drawing it on the daily bars when you've got selling and buying bars, just to see how much strength the market's got on its return in the opposite direction. And there we can see the market heading back towards that 62% there. So a bit of a disappointing day, but again, once you develop the experience of reading the markets, you can actually see precisely the transparency of what the traders do in the Dow. This is why I love the Dow, because it's a few stocks and they can't really hide what they're doing. It's not like the S&P 500 or the Russell 2000, where it's a lot more difficult to see what it is they're doing, whereas it's blatant because of the spikes in the volume. You can see precisely what it is that they're actually doing. In the economic news front for Monday, I'm recording this on a Sunday, so this is why I'm using the Firefox the Forex Factory website within the Firefox browser, just to get an idea of what's coming tomorrow. But of course, this will appear in the PPT software. So German prelim CPI, apparently this is an all-day event, which seems slightly odd. But outside of that, there's nothing really. So sideways market, unless, of course, anything happens as far as the bombing raids in Iraq of ISIS. So we'll see if that has an effect on the market, which, of course, possibly could. And finally, in the implied volatility, we see the market moving back down to 11.05 from the previous day of 12.65, I think it was. They wouldn't be 12.65, just over 12.05, and moving back there, which is what you'd expect as the market found support and moved higher during Friday's trading session there. Right, well, that's it from me. I will see you in Tuesday's market view. Have a great day. As ever, thank you for your support and also for watching. See you in the next one.